Hello friends, this is Raj Sastri from Raj Option Trading. Today is February 15, 2022. Let's talk about leveraged ETFs and do a quick market update, and let's look at beaten down stocks. These are growth stocks with more than $5 billion in cash. So with that, let's jump in. So the market is very turbulent. It goes up and down. There is Russian news, Ukraine news, inflation. One of my favorite strategies is to buy some of these triple leveraged ETFs when the market is down continuously for 3 or more days. As an example, I had been buying some UPRO and QQQ yesterday when the market tanked big time. Yesterday marks a third continuous day of these ETFs falling off. So if it falls further, I would wait a couple more days and then start again. So typically, the moment you buy the triple leveraged ETF like UPRO, TQQQ, one of my favorite, and you could also look at UDOV and UWM. They don't have same oomph as TQQQ. TQQQ and UPRO are my favorites. So when the market falls continuously for say 3 or 4 days, then you can slowly buy some UPRO and TQQQ. And you got to be quick here. When the market comes up nicely, you can sell them off. Don't hold it for a long time. These are not long time trading vehicles. But in general, when market falls down continuously for 3 or 4 days, start buying some UPRO. You don't need to buy a huge quantity. Buy some 50 or 100, and then wait and see how it goes, and you can slowly add more. The beauty of this is you don't need to buy large quantity. You can buy 50, 100, because there is no commission involved here. It's free, unless buying call options and put options, where you have to go with the quantity of 100, which is one contract. With these leveraged ETFs, you can just buy 50 or 25 and then scale as you go forward. That's why when the market tanks big time, slowly it's good to buy some of these big leveraged ETFs. Especially my favorites are UPRO and TQQQ, and it pays very well if you time it very well and buy them when market is down, say 3 continuous days, and then slowly add more. So with that, that's one of my favorite strategy. It works very well in this turbulent market. Next, let's jump into market update here. From a market update perspective, look, I got here a longer term, shorter term horizon here, 3 month and 1 day, as you can see here. This is a 3 month, 1 day chart. Look at the market here, comes down, goes up, comes down, goes up again. So it's a very turbulent market. That's why when the market falls off, say 3 or more days, look here, market fell down 1, 2, 3. If you buy some UPRO or TQQQ here, you'd make it very nicely. So wait for a couple more days of drop, and say 3 or 4 or 5 days of drop, and then buy some UPRO or TQQQ, and you will do very well. So that's a quick update on this turbulent market and how to play some of these triple leverage bull ETFs. In the same way, if the market goes up continuously for a couple days, maybe 5, 6, 7, 8 days, it's okay to slowly buy some bear ETFs, like we talked about in the previous section. As you see here, we have some of these triple leveraged bear ETFs, like the one you see here, SPXU and SQQQ. So typically I don't trade too much of these triple leveraged short side of bear side ETFs, because you don't know when the bull market is going to end. But normally I'm very good in buying these triple leveraged bull ETFs, so that will pay very well, especially when the market tanks for continuously 4 5 days or 3 4 days. Start slowly buying these triple leveraged bullish ETFs. So with that, look here, yeah, S&P 500 is also very turbulent. It goes up and down nicely. And same story with Nasdaq. Nasdaq is very weak, as you can see here. It's good to buy even some of these triple leverage ETF in Nasdaq. When it falls continuously, start slowly scaling and adding more. That's the beauty of these ETFs. You don't need to worry about any of the margin type issues which are involved in the futures market. And then you got Russell. Russell is also very, as you can see here, pretty much weak here, but it's good to slowly add some good stocks with this beaten down market. And you could also buy some, you can also buy some triple leveraged bullish ETF when it falls off drastically. And look here on the longer term, I'm a long term investor. Also, I take advantage of short term market fluctuation. Long term story is intact. Look at the Dow Jones Industrial Average. Look at the long term story, it's still intact. So that's why we don't need to worry too much about market falling off, skies falling off. Look at the long term horizon and keep investing in great stocks. It's okay if it comes down a little bit, but as long as you don't jump into too much margin, you should be good. Long term story is intact. That's why take advantage of this weakness here. Buy some long term great stocks we'll talk about. And if you're in doubt about stock market for the long term, buy these ETFs like QQQ, SPY, IWM, even SMH, which is semiconductor, XLK, and even XLV, which is healthcare. They will do very well for you. So with that, let's jump in here and look at beaten down stocks. So what we'll do is we'll look at stocks with a positive cash flow and net margin, positive net margin. These companies are making money. Volume is more than 1 million shares traded. That means these are very liquid stocks. And cash is more than $5 billion of cash. These companies are not going to go out of business because they got a lot of cash. So with that, let's jump in and go and look at some of these stocks. So with that, let's jump in here. Look, from a stock perspective, we got top stocks here. Top of the list, one of my favorite here, Vertex. Vertex Pharma is a great company, as many of you know here. And look, Vertex is doing great. It's a good company, and look, it's done about 10% in 1 year so far. But look, it's done great, 164%. And its RSI is middle of the road here, 50, and low price to sales ratio. Company makes money. Look at the net margin here. It makes good amount of money. It keeps 31% of money it makes. And look at the growth in 1 year. It grows top line very nicely and great gross margin. And they got $7 billion of cash, as you can see here. Very nice free cash flow here, $2.4 billion. And they got rock solid financials with nice Altman Z score of 13 and overall score by looking at valuation, profitability, and finance. It's 100. It's a great one here. I would slowly take advantage of this market here and buy some Vertex for the long haul, and you'll do great with Vertex. And then you got Thermo Fisher, one of my favorite, as many of you know, life sciences company. This used to be a Wall Street darling during the COVID days with all the COVID testing. Right now it's coming down nicely. Look, RSI 36 tells the stock is sold off here, and nice Altman Z score. Look at the cash they have, $12 billion of cash in their balance sheet, and they generate about $7.9 billion of free cash every year, and nice Altman Z score and nice overall score. I would buy Thermo Fisher and add to your long-term portfolio. And then you got Texas Instruments. It's a steady Eddie stock. Long ago, when I used to go to college, I used to have Texas Instruments calculator, and this company still chugs along very nicely. Look, they got $9 billion of cash here, and look, they got an overall score of 79, which is very great here, and they keep 42% of the money they make, which is a great net margin. These are not money losers. And then you got Meta. Meta, I like Meta. At these levels, I like Meta. I've been slowly accumulating. It might sound painful right now, but you never know when these stocks will turn around and go higher. Look, it's been dropped off big time here. If you want to buy, maybe a couple stocks here and there and accumulate Meta, you're going to do well. Mark Zuckerberg, he's going to go after metaverse in a big way. And he doesn't care what Wall Street thinks. He knows where to put his money and invest for the long haul. He wants to break away from Apple and go after some niche area where he can make some difference. And then you got Applied Material. Again, it's a great stock to buy. Semiconductor, as many of you know here, long-term story is intact. They got $5 billion cash here, and look, 26 percent of the revenue they get to keep. That's the net margin. Companies are great here. And I got a few more. I will not talk through all of them in detail, but if you want a bigger company, go after a company like Google here. Google is great. Look, they're doing great here. Look at the margin, 30% net margin. That tells you company is doing great. And overall score is 94. You cannot go wrong with Sundar Pichai from Google. And then you got my favorite, Lam Research. I like this company. And I like Microsoft with the Satya Nadella. He's doing great. Look, overall score is 87. Look at the rock solid net margin here. Net margin for Microsoft is even more than Google. I think it's a great one to buy here. Then I like NVDA here. Jetson Wong is doing great. They are thinking of hard problems to solve, artificial intelligence. I would love, NVIDIA here. Stock is beaten down here. Look, yesterday when the market tanked, NVIDIA went higher. So it's a great one to buy here. And if you're worried about Chinese stocks, I like just a couple of Chinese names here. I like NetEase, which is a great Chinese stock, and I also like Alibaba. Look, both these names have got nice cash position. Look at NetEase here. They got $14 billion of cash. You don't need to worry about cash here. And Alibaba, as you can see here, they also have nice cash cushion here. Look, they got $72 billion of cash. Alibaba is a stronger candidate in Chinese names. You could slowly start buying, take advantage, and they will also come back very nicely. And a Zoom video with Eric. I think he has to do some acquisition and branch out a little more. That's why stock is coming down. They've got a lot of cash, $5 billion of cash. Their acquisition of 5.9 fell apart. I think they should buy some company and branch into maybe other areas and go from there. That's why it's struggling right now, but the long term it could be okay. And I also like Medtronic, which is beaten down big time, as many of you know here. And it's a good company with the nice $10 billion cash cushion. You could take advantage of this beaten down stock with the very low RSI, as you can see here. So with that, I think we'll end here. Thank you very much. And as usual, when the market is turbulent, go after some of these triple leverage ETF like UPRO, as you can see here, and TQQQ. And you could also do ETFs like UDOW and UWM. When market falls off 3, 4, 5 days continuously, buy some. And if it falls further, buy little more. But don't hang on to them for more than a week or two. Because these are triple leveraged, you might lose money. The expense ratio is a little high. So with that, thank you very much. Happy investing and trading. Please subscribe.